Phil, welcome. Good to have you with us. We were just talking about geopolitics at the top of the show. I mentioned the situation at hand with China, but we also have President Biden on national TV last night talking about this drone attack, taking out one of these terrorists, the leader of al-Qaeda, and ultimately oil's lower here. I guess I'm wondering, what does this mean for Middle East relations and the price of crude?
Well, if you look at crude oil, in the OPEC is what we were really focused on, what they were going to do at this next meeting. We checked out the CME watch tool, and what we saw is that 77.43% chance that they're going to maintain their current output. There's a
OPEC
17%,
will.
Yeah, OPEC. And that there's also a 17% chance that they will further increase production.
Okay.
So 5% of it will be no increase at all. So it all hinges on Saudi Arabia, whether or not they're going to continue to provide that stimulus in the form of excess barrels here. But, the recession fears have pulled back some of the demand, created some demand destruction. You look at the EIA right now, we've got 422 million barrels versus the 5-year average, 457, and cushion's a little tight. And I see that going across the Midwest here. You start down in Florida, gas prices are $3.75. You get up near Chicago and they're north of $5. So, wide range here depending on where you're at. And the geopolitics could really take a quick turn. I think that a little bit of that, that discussion that although, eliminating some of these threats and decreasing geopolitics in the Middle East is one thing, but you've got Nancy Pelosi in Taiwan, and no telling what happens when you get some of these large buyers like China out there, especially around a lot of commodities, how that's going to impact prices.
Okay, that's everything that I want to unpack. So let's start from the beginning there, because in terms of OPEC, as far as I saw, it looks like they're back to where they were in terms of restoring those levels of production back to the April 2020 levels in terms of some of the increases we've seen along the lines. As you mentioned, many don't expect them to. It sounds like you said 77% chance that OPEC's going to maintain current production levels. I'm hearing that even if they were to promise more, many of their member nations can't necessarily meet those promises, even at current levels. So spare capacity or ability to increase capacity at this point just is nil.
Yeah, as soon as they get up to this capacity and they're pumping at full output, what they'll start to do is they will actually start to acknowledge some of the demand destruction and these recessionary fears.
Okay.
All these countries are facing slowdowns. You go over to Europe, it is a global slowdown that's going on, and there is global demand destruction. So prices, they are going to worry about prices coming down, so they might throttle back just a touch on that production in order to keep these elevated levels. I mean, who wouldn't love it if you were an oil producer and you're dealing with oil, flirting with either side of 100?
Well, that's what I'm wondering. I mean, there's not much incentive, it seems like, for them to increase production. That would just drive prices lower, if anything. I mean, and then you do have some of the demand concerns, right? I mean, obviously, as you pointed to, I mean, you said recession fears have pulled back some of the demand.
Absolutely. So you're going to see this back and forth action. So as a trader, you want to be buying some of these dips. Look at that chart pattern here where we've consolidated sideways. We are starting to roll over just a touch. So tread lightly on the downside. Use the mini, the micro contracts. Try and go for shorter punts out there. If you're going to go for a larger breakout to the upside, if you think something serious is going to happen, use some options going out into the back months.
Phil, I wanted to get your thoughts on, because you also said a lot of this hinges on Saudi Arabia and tying back to the Middle East in terms of tensions, relations right now after this recent drone attack. And it's kind of unknown what's going to happen or what it will result into or turn into. But, I kind of think about Russia right now. We just recently heard about some of these shipments of corn making their way through safe passages out of Odessa. If we were to see a shift in terms of Putin's approach towards things right now, and ultimately some of those energy concerns, you mentioned Europe as well, the crisis they're facing potentially this fall or already in right now, but it's going to just worsen this fall, this winter. I mean, if we were to see a shift from Putin and Russia, they're a factor here as well, right? I mean, to consider, ultimately that could drive prices quite rapidly lower. I'm not saying it's necessarily going to happen, but we've seen some give ultimately on the grain side. It'd be interesting if that happened on the energy side. And to your point here, headline news would be a major focal point then as well. We could see a sharp reaction.
Yeah, Putin is like the master puppet master right now. Yeah. This guy you get natural gas prices down to $5.50. What's the guy do? He throttles back on, exports. And pulls it back. We go back up to 950. Now we're tracing back a bit.
Yeah.
You got grain prices just plummeted on that news. Now, I don't know what's going to happen again to go, not to deflect over to, Pelosi and China is the largest buyer of some of these grain markets. Does it strain those tensions? And we see grain prices sell off more. It's been hot and dry here, in the U.S. So the crop has been threatened just a touch, but I think it's just a very volatile event here. You want to be really buying these dips, selling the rips. You go back to natural gas, there are no short sellers left in there. All the funds are gone from there, the small specs. No one's shorting that market. They're too scared on what could happen with Russia. So I'd say look for maybe a 50% retracement between that 550 and 950 for natural gas. Maybe be a buyer down there.
Phil, I got about a minute here. I want to get your thoughts on gold, the bid we've seen recently nearing 800. Do you tie this more to the U.S. dollar or what you were just talking about in terms of Pelosi, some of these geopolitical tensions and the unease that we're seeing right now?
I got to tell you, on gold, 1803 is your critical level.
Okay.
I think if we close above that, the trend changes on there. You rotate back in the last week. We had one of the shortest positions that we've seen in multiple years. So it was just natural. You get the short cover and rally, breakout to the upside. I would be very leery, keep some stop losses in there. No telling what coat Jerome Powell is going to wear. Is he going to be a hawk? Is he going to be that hawk wearing dovish clothing again? So I don't know.
Solid. Appreciate it, Phil. Always a pleasure to have you on the show. Great breakdown in terms of commodities. A lot going on this morning. Phil Streible.